Good evening, everybody. It's gonna be relatively short tonight, just because there's not gonna be a whole heck of a lot to do until we see what the market plans on doing from here. But here is a perfect illustration to show that if you're trading below the T-line, the probabilities are going in the direction of they're taking it down. So anytime you see that, you just have to go with the probabilities. And I should say it a different way. Whenever you see this, just expect the probabilities. You should be getting yourself ready and just observe what the charts are telling you and what the probabilities of what the charts are telling you. So when it was getting a little bit questionable, Friday was a good illustration to say, yep, when they closed below the T-line, there had been a definite change of investor sentiment. I haven't even looked what some of the other, crude oil backed off some. Gold should have been strong, I would guess. No, it actually backed off. Well, that's after hours. So, because we wouldn't be able to make any projection of what the markets are going to do tomorrow, based upon a 1,000-point move in the Dow, we don't know whether there's going to be instant profit taking or still panic selling. So at this point, you only have one logical trading strategy. And that is if you've got long positions that held up and it shows they're going to open this market down further in tomorrow's trading, you probably want to be pretty active of just going to cash. And hopefully you've got some short positions on right now that are greatly improving your equity. But the reason when you see me say you probably want to have both long and shorts in your portfolio, that means the probabilities are starting to roll over that you've got the likelihood of selling off. And again, could you project that it would be down 1,000 points a day? Heck no. Just kind of projecting it might have come down to the 50. So remember what this gauge is or what this chart is telling you. There's been a change of investor sentiment. That is probably one of the most profitable elements of my trading, that when I see things rolling over, I know exactly what should happen. On this day, they needed to open a positive and trade positive to tell us this uptrend was continuing. The fact that they opened it lower after that doji type day was an immediate indication the bulls weren't there. The bears are still in control. Okay, we recommended this one because of the best friend signal on Friday. So this is where I say observe the obvious. Look what happened on this price move today with the Dow down 1,000 points. GSX is still a result of this bullish flutter kicker. Once again, look what the result of this move was today in this type of market. And the trading stocks like Space, excuse me, you can see was not affected by the overall market trend. That was a pretty good indication that they're buying this based upon the merits of this stock by itself, not based upon what the market is doing. And the strong signals will usually consistently produce stronger, not necessarily upside, but what you saw today in today's market, look where this closed, down 2 cents on the day, and actually was trading much higher during the day. This right here told you there was buying strength coming in. So even though it didn't go up, this strength of this market, or this signal right here, put us in a position where if there's something bad going on in the market, there's probably still strength based upon that signal. Is that a left rate? Not really. Whoops. I'm looking. Not quite, and I wouldn't call it a left-right combo at this point. Even if it did, it was pretty much more a visual factor showing us they weren't closing below the T-line. There you go, Don. Good. There's back, and I'll kind of expound on what you just did, Don. I am usually just usually think I'm real smart that if I've gone to a cash position, even though I haven't moved into other positions, because I think the market is doing something that we kind of expect it to do, I feel just as happy that I'm not sitting in long positions that we're selling off hard in this type of market. Now I've got, as you say, more flexibility to watch to see what it does, where the selling may stop and I'm buying at a much bigger discount because I have cash available to do so. CNSL, our breakout of the wedge, still 45 degree, and there's kind of your three white soldiers, which is still a strong bullish signal telling you they take profits on the way up, which means there's no great exuberance coming in. And look at our TRHC, still staying above the T-line. TLRA. Now gives you a view of what you should do based upon where it closed as a doji. What's our trading strategy for tomorrow? It has to open positive and trade positive to stay in it. If it opens lower, close out the position. For two reasons. Even though it hasn't closed below the T-line, but it opens lower, what's our trajectory? It's not good, especially with stochastics heading down. So we don't have anything that's produces good probabilities that things are moving in our favor at that point. Reggie, this one we would have closed out. Because we had kind of a little evening star signal up here. Let's make this deeper. And they gapped it down. Now, does that mean this trade's over? Not necessarily. Maybe we're in a classic looking for a J-hook pattern. But right now, we don't know whether they're going to open this positive, flat, or down. With us trading below the T-line, put your money in cash till you can find something that gives much better probabilities. Same thing on, remember our criteria for a fry pan bottom. You stay long until you see a sell signal and a close below the T-line. This one would have closed out today. So the question always asked, well, isn't this because the market was trading lower? And the answer is yes, this is because the market was trading lower. But what was the investor sentiment with the market trading lower? They were selling it off. That means there's been a change of investor sentiment. Same scenario on EPZM. Gapped it down, started bringing it back up a little bit. What's the criteria? If you stayed long, it has to open positive and trade positive. Where would my safety stop be? I'd probably put it right here at today's open because logic says if it comes back down through there, the strength of the sellers is still prevailing. PRPL needed to stay above the T-line, which it did. But the same scenario, doji rule. It has to open positive and trade positive to stay in it. So things like Twilio, look what it did on Friday. Opened lower after kind of an indecisive day, What did we need to see on that day? Just very simple. It needed to open positive and trade positive. The fact that it traded lower or opened lower would have told me close it out immediately. They weren't taking it up. And once it closed below the T line, what two strong pieces of evidence do you have to get out of this trade? One, because it closed below the T line, and two, look at the trajectory. It's starting to roll over. That's not a good place to have your money if you're trading long. Montana also held up well for the last few weeks. But today we saw a doji gap down. Just that doji gap down alone tells us the sellers have picked up a lot of strength. We don't want to be in this position anymore. Z-Lab, a bearish engulfing left-right combo closed below the T-line. Very simple rule. If you see a candlestick sell signal to close below the T-line, close the position. What's the worst case scenario? You close it out here and you buy it back here when it's heading back up again. Crocs was one of those one of those shorts that may have had you out here, but then you had your evening star signal, and look what the result is. You're still in this downtrend. We recommended Las Vegas Sands the other day because there was a bearish kicker signal confirming. Where do you think the first target was going to be? Down here to the 200. So you stay short on this one. And CYH did a bad signal. That would have been a logical stop. If you stayed in, you can see right now it's used the T-line as support. So what you're looking for is a positive open and trading positive. Assuming all in cash now, when the market permits, any advice on how quickly you get back into full positions, say 8 positions. Remember what happened here today. What happened to bullish confidence? It was shattered. I mean, people were bailing out. When a market is down 1,000 points, that means they're just pulling the plug. What might you see after that? What do you think it's going to take to get investor sentiment positive again? It might take 2, 3, 5, 7 trading days to bottom out and start coming back up. So if that's the case and you're still seeing weakness, maybe you put on 1 or 2 shorts. Tomorrow future is all green. Let's take a gander. Wow, 200. All right, so it's up 200. But remember, what the futures are tonight doesn't mean a hill of beans. By tomorrow at 9:28, the futures might be down 220 points. If stocks open up tomorrow, do you wait till end of day to enter? Yeah, I'd rather be, unless you see something very strong. And I'm trying to think of what that might be. I haven't even, as a matter of fact, we're probably not even going to recommend anything tonight because that's too much of a whipsaw. We don't know whether they're ready to take it up or whether they're ready to take it down another 500 points. Wednesday. What is Wednesday? Yeah, there could be short covering tonight. So you don't have to be in this market if you don't know what it's doing. We don't know whether it's going to waffle in here, whether they're going to take it down and bring it back up. So if we're in a stage right now where we don't know what's going on, just sit. If you miss, you're not going to miss anything tomorrow that would give you any high probability trade setup. When do you enter? You still are looking for strong trades, and we'll get to a few here. Hold on for a second. That's right. We might have a Twitter tonight. Okay, what did I just do? Oh, they were over there. All right, so there's still, this is why we started rolling over, adding short positions, starting just to be safe. And again, I shouldn't say just to be safe. If the market looks like it's getting a little bit toppy, there's no sense being excessively long. So every time you take profits on something, maybe you add some more shorts. So just being short 3, 4, 5 positions out of a 10 position portfolio, you're still going to find plenty of good short positions even in a bullish market. Now we know the cruise lines are getting crunched. You can see that Carnival has never been able to finish up above the T line. We bought some puts on Norwegian. They're the ones that had the, I guess an older couple actually pass away. So you can see how strong this is moving to the downside. When they start gapping it down, look for the panic selling. I make money in Bees last night right at 8:05. Market tank, 10 points made. A quick 150 times 3 contracts. Less than 20 seconds off the 10 minutes. There you go, Pat. I'm hoping that when you're seeing all this in repetition and seeing the simple logic, that you're getting in positions at the right place at the right time. XAIR. Some good strength there. Kind of the same scenario as our CNSL. Good strength there because of the big breakout moves. GNPX, there's your J-hook pattern. You want to keep an eye on this one. Something's happening. Look at your slow curve breakout, your gap up through the resistance area, now a J-hook pattern. What does that tell you? It tells you they were still buying the heck out of this one today, even though the market was tanking. So that pretty much tells you there's something going on in this situation that has no concern about what the market is doing. Here's another J-hook pattern setting up. Kind of your little morning star type signal right off the T-line. Another one that can probably be bought on positive trading tomorrow. VXRT. That's a $1.25 stock. But look at your wedge breakout and your best friend. That one can be bought. Oh, on soybeans. Yeah, because you can see where they obviously failed. Right here at the 34, trading below the T-line. Where's your first likely target? Right here, and then you see whether it holds or whether you're in a wave 3 to the downside. That's on soybeans. All right, thank you, Joel. Let's see, did we do gold? Gold backed off a little bit today. Silver gapped down today. That's surprising. Usually when the market gets panicky, that's when they start buying the gold and silvers. And Rama, I can't get the, get the E-minis over here for some reason. That's big belt hold. What's that tell you? You can buy this if it comes up through this level because that means your J-hook pattern is starting with a belt hold signal. Okay. and NNVC. Another gap up message. Left-right combo. Now you watch to see when this profit taking is over. Another message. Wait to see when the profit taking is over. Oops. That's the FANG. What was I trying to get? FNEO? No, that's not the right one. Now, EGO, one of the gold stocks, when it broke out of this fry pan bottom with a best friend signal, still moving up nicely. And belt hold, not a belt hold, but a bullish engulfing right off the 200, close at the T line. Very simple entry. If it opens positive, it's confirming your bullish engulfing right at the 200 and telling you the T line's not acting as resistance anymore. The message means, which one did we do as a message? Not a good looking chart. Big red candle. But what is the message? The message was they gapped this up and there was lots of buying and there was profit taking. But even though there was profit taking, the message was there was lots of buying up here today. That means there was probably a change of investor sentiment. If that's the case, you watch to see when the profit taking's over, then you can start buying because there's now a new strength in this stock because of that message. We did that one. KOD did a bullish left-right combo. So you get ready to buy this. If it opens positive, what's it telling you? They're confirming the left-right combo in the oversold area and telling you the T-line's not acting as resistance anymore. And Zoom, observe the obvious. They couldn't close this below the T-line. Tells you your uptrend is still moving in the right direction. Lumber liquidators, look at your big morning star type signal. I'm sorry, your evening star type signal. You can get ready to short this one on bearish trading tomorrow. Fitch, there's your slow curve gap down. If this opens lower, you can be shorting this one. And PRBV, you can get ready to short this one in weakness. Look at the failure and then the breakdown. Where do you think your next target's going to be? There's your failure right here at the moving averages. Where's your next target? Bearish wave 1, wave 2, wave 3. And TLRY, the weed stocks, another one that tells you you've probably got a failure right here. Again, with your shooting star, doji, best friend, where's your next likely target? Probably the bottom of this channel. So you're looking for it to move down into this area. Now the difference between a message and a bearish belt hold is very simple. A belt hold gaps up and comes right back into the trading range. A message gaps up but they don't bring it down into the trading range. That means you start looking for positive trading tomorrow. And FLGT, look at the bearish trend kicker signal. Now we're looking for the 50 as your likely target. What about when it gaps below the T-line, like in the SOX? That's not only gap below the T-line, but gap down again. Remember, if they gap down, the T-line is your obvious resistance level now. Yeah, you've got to assume that you're heading in the bearish direction. Oh boy, I haven't really had a chance to look yet, but I would look at PRVB because of the slow curve, and that even though it moves significantly today, it's probably still got a lot more downside. I've got I don't even know where this one can possibly go to. But you can see what type of pattern we're working with. Big dumpling top, gap down. No telling where they could take this one to. I don't know why I'm having this one, yes, REGN. It's a big price stock, but you can see what's happened. There's your J-hook pattern. Here's another one that's acting very strong in this market. MT, we don't care about that. All we're looking at is what is the investor sentiment telling us right now. Bah, humbug. We don't care what happened way back here. We're more interested in what's happening right here. Roku was having a hard time getting out of its own way, but look at your big bearish belt hold signal. And it kind of broke this level today. Whoops. Ah, humbug. I'm just doing this wrong tonight. So when it gapped down through this level, now it did a green candle, so it came back up. You can still short this, though. If it opens lower tomorrow and starts trading lower, they're taking it much lower. You do I on positive. I. Not really. If you're long, you can stay long, but I wouldn't have been buying this one today because there wasn't anything there to tell you to be buying, especially with the market trading off. That is a different than seeing the best friend signal breaking out through this level and then seeing it open and seeing more buying. That would have told me that's where there's a lot of strength. And there's another one that broke the wedge. That one's on my was on my watch list tonight. And then I think I saw this one trading up positive after hours. So that's also telling us we might have the classic fry pan bottom J-hook pattern. Okay, that's about all I got. I'm not going to really recommend anything unless you see weakness. You might be looking at things like this where you can see they have obviously failed and you can see the next likely target. So with that, let me call it a night. I know it's short tonight. We've still got people here at the house after all the events today. I will be coming in relatively early, and if we see anything that looks like it could be jumped into, we'll go after it. So with that, everybody have a good evening. We will see you bright and early in the morning tomorrow. We'll see you.